Hey Trader Steven here with TradersPlan.com. It's Monday morning and I want to start with the overall market, and then we're going to kind of take a time capsule back to 1987. We're going to look at a chart there for a second just to see, I've shown you past corrections, 2010, 11, 2015, even 2018, kind of what was to expected in a rebound. However, this kind of sell-off that we're in right now really, I believe, is kind of in a special class of its own, giving, the steepness of the drop versus some of the other corrections we've had in the past decade. So let's start with the S&P 500. I'm going to focus there today because that is the chart we can also look at, going back to the flash crash in 1987. Right now, one game plan I've been telling people is like, look, you have this pink line, which is, it's kind of hard to see probably on the chart, but it is the 5-day exponential moving average. And if the market can't get above the pink line, I'd probably avoid buying stocks. Cause, right now we just want to put the odds in our favor. We just want the odds in our favor a little bit. And, Friday, the market, especially, we can kind of go over to the Nasdaq here for a second, try to close above the 5-day moving average, right, for an attempted rally, and then just got rejected, really sold off in the close. And this morning, futures got halted overnight briefly, but this morning is really not that bad. It's only down 1%, but I really, really want to see how it acts. If it takes on a new low or not. But right now, if you're like, okay, how do I know when the bottom is? How do I know, when it start to, safe to really start scaling in? If you want to have a more conservative approach and not just trying to buy a little here and getting stopped out, trying to buy a little here, trying to buy a little here and get stopped out, just put the 5-day moving average on it. And if the market can close 1-2 days above that line, maybe we can get a rally into the 20-day, right? So if I go back to the S&P 500 real quick, so clearly we're going to hit new lows this morning. Okay, so that's not, we're not rallying by any means. We're selling off, right? We're in a trend, but it's in the wrong side of the trend. Pretty soon, at least in the S&P 500, this 50-day is going to cross under the 200-day, and you're going to get that death cross. So kind of be careful of that. History, you get the death cross. It happened right here. And then, the market continued to go lower and eventually it came back. So, I've done webinars this on the past, the golden cross, death cross. And even though when you get out, when the 50 crosses below the 200-day, right? A lot of times there's just a lot of noise that happens when the 50 is under the 200-day. So a lot of chop, a lot of whipsaw, and sometimes, when you get that golden cross, it's safer, right? You're kind of back in a bull market. The odds are in your favor. Now, obviously, we don't know what's going to happen. Nobody does. But right now, we're trying to be the house the best that we can. And, the odds are definitely not in your favor when the market is, trending so steeply down. No one thought it could go down this far, but it did. So here we are. And the odds are against you if the 50 goes under the 200-day. But we will eventually get a bounce. I want to go back to, look at the 1987 crash, and let's look at the weekly. We'll start with the daily chart here. So you can see that, man, this kind of looks familiar. Looks very familiar, right? You had an attempted rally and then just absolutely got slaughtered. Try to bounce, failed, try to bounce again, and then kind of chopped around for a bit. But slowly kind of grinded itself higher, right? Slowly got out of this. Now, why I don't know if it'll take this long, right? This was a while. Even though the S&P 500 in 1987 actually finished the year positive, believe it or not, it finished the year positive. But the point I want to make on this chart is when you have just massive volatility sell-offs, it can take a while for that volatility to, kind of work itself out, right? The market has to digest those gains. The volatility, it needs time. So, you did get, a trend, a slow moving trend, but it slowly was grinding itself higher. what's interesting is since I've started shooting this video 5 minutes ago, the market went from, minus 600 points, or the Dow, to, plus 182. That's just, kind of wild. So, we're gonna keep an eye on some stocks today just to make sure that the market, holds in there, given the volatility. And I'm gonna we'll just let it open for a minute before I start sending out alerts. But I just kind of wanted to show you some stocks. I'm trying to give you some ideas to really sharpen your watch list. SDGR. The stock was up quite a bit on Friday when the market was negative. Punched through the 20-day moving average on a pretty nice volume spike. So the 5-day moving average currently is 34.44. So I would expect if this does rally that's going to hold for a little bit. So again, you don't ever want to risk more than 10% on a position, but right now your max portfolio should be, you're risking 1% per trade. That means if you have a $100,000 portfolio, your max stop loss should be at 1%, $1,000. But I found some tech stocks that are looking kind of interesting that I think can snap back hard. Slack Technologies. This is a software company that allows. It's kind of like a business technology platform that allows online companies to collaborate. You can see right here that it's kind of climbing back. You got a weekly reversal pattern. Let me get to the weekly chart here. You got a weekly reversal pattern. However, it's a really, really long pattern. So if you play this one and you buy at the open today, I would definitely keep a 10% stop loss. But keep in mind, no matter what you do, the market is not trending right now, so you're kind of bottom picking. Zoom is still a very strong internet stock. It is riding the 5-day moving average. If you entered this, I would hold this as long as it's riding, right? As long as it's riding the 5-day moving average. So, Cloudflare, this is another one that was showing huge relative strength when the market started to sell off, and then eventually it just gave way. But I think this is going to be a big one. I mean, look at that weekly reversal pattern right there, but that is such a long bar. Goes from, $15 to $23. It's like a 30-40% bar. But, one thing I like about this company is, one, management owns 52% of it. I like publicly traded stocks when management has a huge vested interest. Very consistent sales, not quite profitable yet, but it's sold off in snapbacks. This is something that I would really keep an eye on, because I think this one has already proven it can buck the trend. So if you have an update today, again, I'm looking at the 5-day moving average as a play for stocks. If stocks start to pop, then you kind of trail with a 5-day moving average. And I think if this moves above Thursday's high of 23.18, I think you could put a buy stop order up here, and then just probably trail it with a stop loss. It's kind of amazing. I'm just kind of looking at the screen how much it has changed. DocuSign is another online digital e-signature solution. I use it all the time. This isn't quite a weekly reversal pattern because it didn't undercut last week, but it look at that relative strength relative to the S&P 500. So it means it's going down less. Look at the huge earnings. Decent return on equity. Number of mutual funds is really growing from 406 to 742 in the last 12 months. That is a lagging indicator. Now, it is sloppy right now. It is sloppy, but what's not? You have to expect that. So, with this, if it pops, maybe it pops above Thursday, you could take a stab. Maybe it pops above this pivot. But I think with some of these stocks, you definitely want to try to catch them on the way up. Because we're in a major downtrend, so you just don't know what's going to happen right now. So we'll just kind of keep an eye on this. I might be alerting some stuff today. Okay, you have Coupa, another weekly. No, it's not a weekly reversal pattern. but it did reverse pretty significantly. It popped, let me get my tracker back. It popped 25% on earnings. I think it was last Wednesday or Tuesday. So that's pretty huge. Right now, I'm not really seeing an entry because it did just pop above the 200-day. Then it looks like it got rejected. So maybe if it comes back a little bit, kind of creates a pivot, you could buy it as it crosses above this 150. So again, these are just ideas. Just trying to kind of stay in front. You know, if the market does show some strength, the market seems to be popping all of a sudden on news that the Fed is going to buy treasuries. So, you know, maybe that, you know, works out. We'll keep an eye on stocks today. But this one right here, Quidel, this one is, didn't quite low, 72.99. Didn't quite create a weekly reversal pattern, but that is a lot of relative strength right there. Look at that line. It pretty much didn't even break the 10-week moving average, which it didn't, which is very impressive. So this is going to be a big winner in my opinion. You know, accelerating sales went from negative to 5 to 8 to 15. So something's going on there. Accelerating earnings. Negative this year, but positive this year. 26% return on equity. This stock looks like a winner. Very, very volatile. Again, as they all are, it's kind of hard to look at anything and say, wow, that looks really, really good right now, given the volatility. But this is, it's a pretty volatile, stock. But, you know, maybe since it's finding support at the 50-day moving average with the 10-week, maybe you can get it a little bit closer, to $80, maybe under 85, between 80 and 85, and then use the 50-day moving average, kind of right under it as a stop loss.